What's going on, everybody? It is Tuesday, 2:53. We're going to go ahead and go over some supply and demand concepts, what makes certain zones valid, how to identify these supply and demand zones, and how we as traders should be able to profit from them. Um, so we're going to go over that. We hope you guys enjoy this and hope it's informational. We've been getting a ton of comments about how to do all of this regarding supply and demand. A lot of people are getting a little bit confused, so we're here to clear things up and help you guys get on the right track. All right, folks, so let's go ahead and do the very first thing that we should do before we start to identify any supply or demand zones, and that is to identify the directional bias, right? So on the 1 hour time frame, you can see that the directional bias for the NASDAQ is bullish. How do we know that? Well, we know that because swing highs are constantly being taken out, right? Price is constantly trading at a higher price, breaking swing highs, right? And not breaking swing lows, right? When price doesn't break swing lows and continues to break those structure highs, we have a very bullish bias, right? So now that we've done that, we can go down to the 5-minute time frame and look at some demand and supply zones. All right, folks, so these are the three basic confluences that I have to look for before taking a trade or before locating a valid demand or supply setup. We look for very first higher time frame bias, right? We just showed you the 1 hour time frame of the NASDAQ, and price on the NASDAQ is frequently having higher highs and frequently making higher lows, right? That's the general gist of the trend on the NASDAQ. Then we look for a break of structure, right? To locate a demand or supply zone, we're looking for an area where price breaks a major or a minor swing, which is going to be for this, for example, right? Price breaks the swing low right here. This is a break of structure, all right? It's just basically a break of structure is in terms just an abnormality, right? Where price either takes out a swing high or a swing low. And then what you want to do is you want to look for an area where price comes in with the strength, right? This is confluence number 3. We see that price has significant strength in this exact point, right? At this exact point, this is the area where price traded at before breaking that structure. And usually we locate this with a single candle, but sometimes it can be identified with a range. Sometimes it can be identified with 2 candles. There's a couple of ways that you can identify demand or supply zone, but we're sticking with the basics, right? Pretend this is a single candle. This single candle was the area before price broke structure, and we did it with an amount of strength, right? It was very short time before price broke structure, so we're looking for that strength, right? All right, so let's go ahead and locate some demand and supply zones on the charts. I just wanted to show you that real quick to show you what are some of the confluence I look for before locating demand and supply zones. All right, there we go. So now that we're on our real chart, we're going to go ahead and identify this demand zone. All right, so we have the same thing. We have the same bias, right? We have a candle right here before price breaks this swing high and then ends up breaking this swing high here, right? So we have strength, right? We've got breaks of structure, and now we just have to wait for price to dip into this demand zone. And it was about 2:20 a.m., so that would be London and Tokyo session, where price, let's see, this is, yeah, all right, so this is London session. When price taps into this demand zone, just watch it fly, right? It goes way up. It almost immediately flies up, right? So the reason for that is because there's directional bias, right? There's directional bias on the higher time frame. We have a break of structure, and then we have a significant amount of strength leaving this area. How about to the downside, right? We're going to go to the opposite side, where price has a swing low, a break of structure to the downside, and significant strength, right? This was just one pure 5-minute candle. Price then taps into the supply zone and then continues to trade down. Now this was a anti-directional bias because price never broke these swing highs. Price was significantly pushing down because they were breaking these swing lows in here, breaking swing lows right here, right? So we had a lower time frame directional bias to go short because price wasn't breaking structures to the upside. Let's go and view another example. All right, here. So we have the same thing. Price breaks structure to the upside here, right? And we do it with ease, right? We do it with a lot of strength. So when we see that, we want to identify the last bearish candle before that movement, which was this movement right here. As you can see, price tapped into this demand zone, ended up breaking structure here, and then ended up breaking these highs in here. So you could have banked big on this trade, for example. And then price again creates the same demand zone within this demand zone, right? This was the last bearish candle before price broke these highs and ended up trading much, much higher. So as you can see, during Monday's trading session, price tapped into these demand zones and ended up reversing to what you could have had a huge profitable trading day just on that single trade right there, right? So those were just a few examples. We're going to try to keep this short. We're just kind of trying to show you guys what I look for when I'm identifying zones, right? I look for a few things, right? I look for an area of the market where price breaks structure with significant strength, right? There can be, a few, maybe a candle or two where price kind of, maybe slows down, but then breaks structure. But you, in the end, want to see significant strength, right? And you want to find that last bearish candle before price break structure, right? Those are just a few things that you need to be able to identify those zones properly. And you want to make sure that you are identifying the zones that tend to correlate with the higher time frame confluences. Or bullish, obviously, in this case, I gave you plenty of bullish demand zones, and I also even gave you a supply zone, right? We had supply zones there. We had one right here that we didn't go over. But yeah, so that was the video for today. We wanted to make another video because we've been getting so many questions about, how I identify supply and demand zones, kind of clearing up the air on how I trade and in the strategy that I use. Again, to be clear, we're going to go over these confluences again, right? We look for directional bias, right? If the higher time frame is bullish, right? If the higher time frame is bullish, we want to find areas in the market where price breaks structure and then leaves that area with significant strength, right? So same thing, for sells, we look for breaks to the downside. We look for breaks of swing lows, and then we look for that candle or two where price slowed down before that significant strength came in and broke structure. So sorry about this, I'm a little bit tired, but I wanted to clear some of those things up. Wanted to show you with ease how I look for these demand zones and these supply zones. We're gonna probably do another video later to kind of like dumb it down a little bit. I'm just really tired right now. I just wanted to show you guys, the most simplistic way to look at it, right? But yeah, if this helps you guys, leave a comment below. If you guys have any questions, we do have a Discord link to get into contact with us. But besides that, we hope to see you guys tomorrow or Thursday in the future. So we hope you guys enjoy this. We'll see you later.